Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thank you for joining us again this week for Mike on Money, where we cover everything in the markets that's going on, that's coming up. And also this week, we're going to talk about the global IPO market, which has hit record numbers in 2021 and was very, very active in 2020. And also, we're going to talk about the SPAC boom and what's going on there and what those are. And just kind of give you an update as to what's happening, what we see there, and what to look for if you're playing in that market or you're looking to be active in that market. As always, remember, everything we cover here is for information purposes only. Always do your own due diligence or reach out to us at mikeonmoney.com. Happy to answer any of your questions related to any of these topics or any other topics that you might be interested into. You can always go there as well and find our other videos, our podcasts and content if you are looking for information around some other topics that you might be curious about. With that, if you're watching us live here today, you can ask us questions. Just hit that quick Q&A button, type in your question. We'll definitely try to get to it today while we go through, depending on time. If not, I will always follow up with an email or give you a shout. And make sure we answer your question. If you're watching recorded or on the podcast, again, remember, mikeonmoney.com, you can get a hold of us there. And with that, let's dive into what's going on. So in the economy this week, we're looking for US housing start numbers for April. We'll talk a little bit about the Canadian numbers came out, not the starts number, but the pricing showing a little bit of weakness, but the start numbers are still pretty strong. Here in Canada, we're expecting that in the US as well. Walmart and Home Depot both coming out with their Q1 numbers, and I'll talk a little bit about expectations there as we go through the US updates. As for the markets, edging back up again, we did have a couple of down days last week as we saw some selling off due to a little bit of lackluster on the new job front, especially in the US. A little bit of concern that inflation was slowing down the economy a bit down there. And then we had some more positive news about new job creations numbers, and we seem to bounce back from that pretty quickly. So as we've been talking about for the last few weeks, especially in the growth areas like the tech markets and the big growth names, there is that, that volatility is sitting there on those names, on that sector of the market. Anytime we see any bit of slowdown in this recovery or growth in the markets or in the base economy, we're going to see those pullbacks. Again, if you have quality names you're following, a pullback is only an opportunity. It's nothing to be overly concerned about. Just make sure you know what names you're buying. I wouldn't just jump on broad pullbacks. It could be deeper reasons around that. But if you have particular names or particular sectors that you're following for specific reasons and you want to take advantage of those pullbacks, I do recommend that you do that. But that being said, as I mentioned, we've seen things get a little bit stronger again. Certainly saw a snap back from the pullback last week and continuing to see slight increments in the markets up so far this week. AT&T's out there kind of finalizing its expansion into streaming services with the purchase of Discovery. Times Warner back in 2018 AT&T bought Times Warner back in 2018 in order to compete with Netflix and back then the newly minted Disney Plus channels. As we're seeing this breakout into streaming content as opposed to cable, and everyone wants their own streaming services. Everyone's fighting for content on these services, and of course Netflix being one of the pioneers, Amazon in behind, HBO Max, Disney, and a flurry of other ones, especially in the United States, more than here in Canada. So as we move away from the traditional cable packages where you would normally say, hey, I want access to all this, I'm just going to pay for cable and get it all. Now you get, we were all happy, hey, I can ditch cable and I can just have my streaming services and I can just watch, one or two streaming services and get all my content. Well, now they've, of course, split out into many different ones. And maybe we'll come full circle. And at some point, someone's going to put together all these streaming services into one package that you can subscribe for. So for now, though, the battle goes on for content, and AT&T's out there buying Discovery to get all their content onto the platform. Job fears, as I mentioned, and price spikes, problems for the White House, especially last week. Unemployment's still staying high, and as I mentioned, those numbers weren't as positive as they were hoping for last month. And then, of course, the rising gas prices and rising prices in a lot of goods. Of course, supply chain being pinched. And then the gas lineups we saw in the southern states, where people were hoarding gas. It was the early pandemic paper product, toilet paper and paper towels and Lysol wipes, pandemic buying all over again. Obviously, it was unwarranted. The gas lines got turned back on again. The shortages, in fact, wouldn't have happened if it hadn't been for people hoarding. We saw tons of accidents as a result of that, car fires, and improperly stored gasoline. All bringing back memories. If those of you remember the 70s, I was just young, but I do remember the gas lineups in the 70s when we had inflation, we had gas shortages. So the White House got a little bit of concern, but certainly they're not in a situation that we're going to see that again. One, there is no gas shortage. That was kind of falsely created. And unemployment, while did slow a little bit temporarily, a lot of the incentives that the White House have put into place should actually be creating a lot of new jobs this year. So hopefully none of that. And as we mentioned last week, inflation did start to increase, a little bit of concern, but it's probably a short-term bump. We should see that pull back a little bit and continue on for the rest of this year. As I mentioned, I don't have too much concerns that it's going to get out of hand in 2021. But obviously 2022 might be a different story, so we'll keep watching that. Oil prices capped a bit as hedge funds started to take some profits as oil bumped up against $70 a barrel. We saw some profits coming off the table. Again, some of these hedge funds had bought last year when we were at $30, $40 a barrel. So just some profits coming off, not really any change of outlook there. The EU is granted a partial truth to the US on some Trump-era tariffs. So, of course, you remember from last year, the EU, as well as China and many other countries, the United States was in a tariff war, especially around the metals. And of course, countries put retaliatory tariffs on US goods back home, and Europe being no different. So obviously the new administration in the United States is in negotiations with the European Union just to put a partial truth on those tariffs while they figure out where things are going to settle out, and deal with China on the trade front is problematic in some fashions or in some areas, and they're going to put together a united front as allies usually do in these situations, and hopefully maybe get rid of those tariffs to help some of the U.S. names sell overseas a bit more without those added tariffs and bring down some pricing. The U.S. home builders' confidence was steady in May. I mentioned we're looking for the numbers out of April as far as the starts go, but so far we've not seen a slowdown. I don't see that we're going to see a big slowdown in that arena until we see the interest rates move. That's what's really driving the housing market right now, and that'll probably continue. Wells Fargo is about to launch a 10-year plan to boost banking inclusion for underserved communities. Sorry, a little bit of chuckle there. Of course, the Wells Fargo. First thing that came to mind when I was reading this story was, of course, Wells Fargo was going to these communities and just open accounts for everybody and not tell them. Of course, they're just coming out of lawsuits over the big fines that they had to pay over their credit card fiasco from a few years ago, where they were just opening more and more credit cards and pushing credit cards, especially on smaller communities and minorities who didn't necessarily, who were new to the country, who didn't necessarily understand what they were signing up for. So it's kind of interesting that Wells Fargo's, launching this program, but they are looking to expand into the smaller communities, where mainstream bank accounts, kind of aren't the norm, which is a big shift for banks. If you think about banking in the last decade or so, banks have really pulled back from that model, right? You think, certainly when I was growing up, banks locations were set up in the small communities. Everyone knew everybody else, the old movies, everyone knew the bank manager, but banks moved away from that. They centralized, they closed a lot of the smaller branches, they got out of the communities, shifting to more online services, obviously, bank machines and so forth. So Wells Fargo is kind of recommitted with a 10-year plan to kind of get back to that roots small community banking model as part of their offer in any way. Bitcoin dropped to a 3-month low in some wild trading after Elon Musk sent out some tweets. So some more volatility around the cryptocurrencies. Not surprising. I mean, this is just the nature of the beast, although it seems to be very focused and centered around Elon Musk. And, as I've touched on in the past, I won't get a lot into it. He drove up Dogecoin just on some tweets and some jokes he made on Saturday Night Live, or drove it down after that. And then, of course, we saw it rally, or Bitcoin rally up as he made announcements that Tesla was going to accept Bitcoin for car purchases, and that Tesla as a company went out and bought 1.5 billion of Bitcoin in order to service those purchases, and then they reverse track on that, on accepting Bitcoin, because the environmental impact of the blockchain, which handles all Bitcoin transactions, and now he tweeted out again that they're not selling the Bitcoin, but they're still not accepting it for cars. So a lot of volatility around Bitcoin in that. And I'll talk a little bit more about the crypto market here in a couple of minutes. With that, the COVID update, obviously things continuing to go well. Every week we seem to have some pretty good news. BC, of course, reported fewer than 500 cases for 4 consecutive days, which is very nice change since back in March, when we broke through kind of that average with the third wave that we were in. They have opened up the vaccines for everyone 18 or over. I can give you proof that both my boys are booked for this Sunday to get their vaccine. So hopefully we are getting close to everyone, or all adults getting or being available to get their first vaccine, and then we can really put a push on for everyone's second shot. Obviously, this doesn't change anything until we get through the long weekend. That's kind of where the province has said that they're going to relook at what measures we have and what those look like. And as I touched on before, I mean, one of the big concerns is we're not just going to hey, everyone's got the first shot, great, go back. No measures in place. I do believe we're probably, given what the government has done so far, we are going to go into a gradual reopen. And we're going to have to see what that process looks like. And hopefully it's faster than I'm expecting. But I am hoping that we can get back to some of the things, at least back to the levels we saw last summer. And that's BC, which, I know it's been a bit tough here in BC. But I talked to colleagues and friends in Ontario, and they're far more shut down than we are. They would hope to get to where we're at, and then go from there. So we're still doing pretty good in BC, but obviously keep an eye on the rest of the country as well. Coming up in the US, as I mentioned, Walmart is expected to post their first quarter numbers. We are expecting some slowdowns compared to the previous quarter. There was a boom for Walmart during a lot of the closures. Obviously, less stores were open, more people were staying at home during the lockdowns. A lot of online sales surged for them, but now we're, especially in the US, we're seeing more and more things opening. People going back to a little bit more, call it normal, or back to the before times, as I like to call it. And so not necessarily a big drop, but just not as big growth as we've seen in previous quarters. So we should see that out of the walnut numbers. Not going to be a big surprise there. The Commerce Department is expected to release that housing data and the permits for new home construction. Again, we are looking for a rise for April, but probably a little bit slower a rise than previous months. As capacity is kind of being reached as far as buyers out there, and I think we're seeing that in the numbers as well. Google's I/O, so Google is doing their big giant annual conference, which they skipped last year, to showcase their new technology, coming back with new products, new features, keynote speakers. This is the same thing Apple does every year when they do their product launches. So we'll get a view into what Google's been working on and what they plan to launch for this year. As I mentioned before, AT&T is set to spend $43 million on the Discovery deal. And again, this is just for the battle for the home streaming service to get more content onto their platform and get more subscribers. It's all coming down to subscribers these days for the streaming services, and the only way they can keep that up is churning out more content and some stiff competition. As I mentioned, HBO, of course, is working very hard to put out new content constantly, and Apple TV, of course, they have the whole Star Wars cycle, and Marvel that they're putting out onto theirs, and they've been big winners with all those new streaming content and shows that are winning the subscriber race. Netflix, of course, came off the high, but they had pretty big market share to start off with. So this battle is going to continue. Tesla must again in the press blaming Germany's bureaucracy for the delays in opening the Gigafactory over there. So they're building the batteries and building the Tesla cars in Germany, just outside of Berlin. It's been delayed. I think they're about 6 months behind at this point, maybe a little bit longer. And they've just had regulatory issues there getting that open and running. Supreme Court rejected Uber's bid to avoid the driver pay lawsuit. So we've been following this for a little while. Of course, it started in California, and this is the gig worker versus employee status for the ride-hailing companies, and that's going to spill over to a lot of the gig work type models if this goes through. There's pros and cons on both sides. In some situations, it's better to be an employee. In other situations, it's better to be a gig worker, depending on what you're trying or what that particular person is trying to get out of it. Obviously, the gig work is much more affordable for companies. They don't have to give as many benefits and cover as many costs for the employees, as they're treated as independent contract workers. So they tried to get this thrown out on Supreme Court, the lawsuit, so they failed. So that just means it's going to go ahead. The lawsuit's going to go ahead. So we'll see what the final outcome is. They just didn't get it dismissed. J&J vaccine deliveries were cut in half this week to EU. J&J continuously having problems with their rollout on their vaccine, which looked so optimistic coming out with the one-shot vaccine. Didn't have to have the booster. A lot of people, a lot of countries were excited about that. Of course, they've been plagued with some problems. Obviously, some temporary halts at different times with the blood clotting issues. And then, of course, the quality. They had the 15 million doses in the United States get thrown out because of contamination. And now they have some problems with the shipping some doses over there where the compounding supplies weren't coming in and being able to get them out in time for their April shipments to the EU. So J&J continues to be plagued a little bit with their vaccine distribution and getting that out to the different countries. The U.S. Supreme Court also backed an energy company over Baltimore in the climate case. Not surprising, kind of an interesting early case where Baltimore, went after BP, Chevron, Exxon, and Royal Dutch Shell, and a few other energy companies, filing a lawsuit against them for costs due to global climate changes. Obviously, this is a big issue. Not saying this won't eventually become something, but Baltimore versus these companies, it was a big stretch. Might see the U.S. against them at some point, or a class action with multiple states involved going after them, or even multiple countries. Of course, we did see this with healthcare costs around the tobacco companies years and years, decades ago, and now we're seeing that on the energy companies. And I do think this will come back in some form or another, but just this round, obviously, pretty early stages to get that kind of class action going. Coming up in Canada, the TMX Group, the stock exchange in Canada, CEO John McKenzie is going to the US to speak on behalf of Canada's markets to the Barclays America's Select Franchise Conference. So just giving an update on what's going on in the Canadian markets and exchanges. And of course, Canada's home sales numbers did decline in April from March, softly. We're still seeing prices and starts fell a little bit, but we're still seeing obviously year-over-year growth. And a lot of those prices we did get in March, some pretty crazy bidding. I think people just came back a little bit to reality on how much they were going to overbid of asking. And we saw some pretty simple homes being bid up 25 to 30% above asking price in bidding wars, and that was just getting a little frothy, I think, for the market. And so that's kind of come off a little bit in the last month. We'll keep a close eye on it for May's numbers. On the exchange side, the dollar fell a bit last week. Canadian dollar rose almost 83 cents, and that's kind of just that longer term trend we've been watching. And same with the bond markets. Oil, I mentioned, we tapped to get up against the $70 barrel mark, pulled back a little bit on some profit selling, but still a lot of strength in that. And gold is likely to strengthen a bit here, as we expected some various indicators around that to improve on the global front. So let's talk about the IPO market, what we saw last year, what we saw for the start of this year. As I mentioned, the IPO market hit a record high this year in terms of both money raised and share sales through volumes of listings bolstered by a strong equity rally. And really the monetary stimulus measures have driven it up. So if you think about it, companies, why did they IPO or why do they raise capital through a stock offering? It's because they can get a good value. That's the best way that they can, or the cheapest way they can raise the most amount of money. If a company in a bad market is being valued at $20 a share because there's a lot of pressure on the market, strict monetary policies out there. If they go to market, sure, they can sell 1 million shares at $20 a share and get 20 million. But what we've been seeing over the last year, because of the strong markets, a lot of momentum in pricing and very easy monetary policies out there, that $20 shares were selling $40, $60, $80 a share. So all of a sudden, the companies can raise 80 million for the same, basically the same revenues. So there's been a lot of incentive for companies who were thinking about raising capital, even if they didn't need the capital right now, if they were thinking about raising capital, to raise in this market. So this was kind of caused the frenzy of people or companies IPOing out now while they can get top dollar for their stock, pocket some of that money for future use, or as we've talked about a lot over the last 6 to 8 months, there's a lot of mergers and acquisitions out there. So, go buy other companies with this extra capital that they're able to raise in the market. in the current environment. Now that also means that when you're out there buying these IPOs, you're paying more potentially for what you're getting, and that's definitely true of some of the names, especially some of the red hot names that have been coming out over the last year. The Airbnb, the DoorDash, the Coinbase. They've launched out at some really expensive valuations, much more than the initial underwriters valuations on them. I think the recent one that we were watching closely was Coinbase. This is the cryptocurrency platform. They were originally supposed to come out, I believe, around $140 a share on valuation. They were revalued a couple of times. They put a virtual price, so they didn't distribute any stock. I think the virtual price was $240, $245. That's what they were going to launch on the market. But of course, because of this kind of frenzy around the IPOs, I think the first trades were over $380, almost $400. It did get over 400 in the first day. But of course, now that initial volume got snatched up, as the trading continued, it came down to 3, 2. I think it's trading somewhere around 240 right now, US dollars a share. So still pretty high from its initial valuation, but certainly massively off the launch. So a lot of concerns around those pricings, and that goes back to what I always say. IPOs are not bad if you know what you're buying and you're buying it for the right reason and you're paying the right price. Doesn't matter how good the company is, if you're paying too much money for it, you have to be really careful. And when I say too much money, it all comes down to its cash flow. How much money is it earning, and how much money, its revenue, how much money it's making, and how many times forward are you paying for that? So a lot of times these things will come out, and if you're paying 2 years cash flow forward, it's not necessarily a bad price, as long as its growth on cash flow continues to stay steady. You will catch up before you get to that 2-year mark, because the company will continue to grow its cash flow. If you're paying 10 years forward cash flow or revenues, you're paying a pretty heavy price. That means that company has to continue to grow steadily for that 10 years in order for you to, even kind of recap the value you're paying today. So be really cautious on them. They have slowed down quite a bit in the last, I would say, 2 months. So valuations are getting a little bit more realistic, or the froth that initially comes out on them is going away a lot quicker. So you can wait a couple of days or watch to see where the price is going to settle and decide whether that's a value that makes sense for that company. Now, there's also been a lot of spending or a lot of capital raised in SPACs, or special purpose acquisition companies. And I'm going to dive a little bit into that here shortly. But just as a sense, the total global IPO listings for this year, as of the last couple of days, it was 1,054, which is a massive boost in capital raised over previous years. 2021 is almost quadruple 2020 as far as the numbers go. The United States led the world in IPOs so this year, raising 130 billion, which 88 billion of that were SPACs. And the Chinese and UK firms raised about 39 billion, and about 12 billion of that was SPACs as well. And of course, Canada being the largest, Canada raising only about 4.25 billion, but that's representative of our market, compared to the rest of the world. So SPACs, what are SPACs, and how are they used, and why have they been so popular? SPACs are basically a pre-IPO. So a company will go out and raise capital. So they'll issue a SPAC, they'll list it on the exchange, and they'll sell shares, which is essentially what an IPO is. The only difference with the SPAC is it's basically a shell. The company doesn't own or do anything. They're just raising capital. So the SPAC will go out and raise, and they'll have a target, 20 million, 100 million, depending on what they plan on putting in there. So the SPAC, once created, raises the capital. It has all this cash in the company, And that's essentially all it is a listed company with a lot of cash. And then it goes out and tries to, instead of a private company listing as an IPO or going public on their own and selling their shares into the market, the SPAC will just buy up the private company into the SPAC. The SPAC will then rename itself to that company it's bought up, and those shares become shares of that company. So kind of a roundabout way to IPO a company. I'll forthcoming here. There's been good SPACs out there, don't get me wrong. Obviously, they've been very popular for a reason. I don't love the structure myself or for my clients because you're buying into an unknown. A lot of SPACs do have terms that once they announce the company that they're buying, you have an option to opt out at the issue price. Not all do, some do. And then, when they take this company, they reverse takeover basically into the SPAC, you end up with shares with this with underlying company, and hopefully the general managers or the company that's managing the SPAC did a lot of due diligence before they bought that company and took it public. Personally, that's not how I like to pick stocks for people's portfolios. I like to be much more targeted than that. Also, I find, the really good quality companies tend to IPO on their own without doing the SPAC. These tend to be smaller companies, which again, not necessarily negative. Just, be aware of what you're getting into when you go into the SPACs. And when you do see what the company's buying, make sure that you can get behind the company that's going to, be rolled out through the SPAC in the long run. The other thing I'll warn, and this is true of the IPO in general, but SPACs in particular, in the recent months, is whenever something gets really popular and a lot of capital is being thrown at it, the more and more we see bad actors. And this is not just in investing, this is in any capitalistic marketplace. When there's success and it starts to become easier and easier to be successful in that particular space, you all of a sudden get copycats. And as you get copycats, the quality starts to degrade. So at this point in time, if you're looking at a SPAC, obviously we've gone through this frenzy over the last year around them. I'd be really cautious to see who's running it, what their track record is, and take a really hard look at what they end up putting into that SPAC, because you do go in a little bit blind on these types of purchases. So it's worthwhile understanding all aspects of what you're buying, or just wait. As I mentioned, wait for the IPO, wait for the SPAC to rename and roll out the company. You get a solid look. All of a sudden it's not the SPAC that's looking at the company's financials and deciding if it's a good buy or not. You can look at it, or you and your advisor can look at it and say, yes, this is a good company or a good investment. It fits in my portfolio. I want to take advantage of it. You can buy it at that point once it's out trading as the company, as opposed to the special purpose acquisition company or the SPAC under the SPAC name. So just my 2 bits. Again, there've been some very successful ones. There's been some very good deals. I'm not saying you shouldn't look at them, but do reach out to us if you're considering one. We'll give you insights to the management team. Usually when they launch a SPAC as well, the management team is usually focused on a particular sector or target type of company in there, like healthcare or technology. We saw some earlier ones were focused around the cannabis sector. So again, we can take a look and see what that management team is trying to achieve, what they're looking at, what their track record has been, and to see if it's worthwhile considering, or definitely take a pause and wait and see what comes out of it. So with that, as I mentioned, got our future expectations. I do think this market's going to slow down a little bit on the IPO front and the SPAC front, just because of the amount of volume that's already kind of come through. we are seeing the markets being a lot more tentative when looking at these deals because of the valuations, because the numbers are starting to slow down in the recovery. Again, not bad. In fact, if you go back to September of last year to some of my videos, you'll see me talking about we fully expected on reopening, this big boom, this big pent up demand as cash flows in and people spend and go out and buy, all the things that they were concerned about, and then tapering. That doesn't mean no growth. It just means tapering. So, even last week, we talked about the volatility that's going to bring, especially in those growth names, because those growth names are expecting that high growth to continue. And that's where those value names are going to come into play, because the value names love steady growth. They like that nice and repetitive growth, lower growth numbers. So, we're seeing that switch a little bit from growth to value. We're seeing the market starting to reflect that a little bit more. So nothing to be concerned about. We're just probably not going to see the IPOs in as high as numbers for the balance of the year, and maybe not as frothy on launch. But that doesn't mean they're not good. And in fact, I would prefer to see them not get overvalued too quickly, because that's just speculation. That's not really investing in the longer run. With that, I mentioned I was going to talk a little bit more about cryptos. I don't have time today. Maybe I'll do another special video. I know I've done a one-off video on cryptos. The only thing I want to say, make sure my theme of my speech is here. Make sure you know what you're buying. But not all cryptos are the same. Ethereum, for example, is a very different animal than Bitcoin, even though both crypto, they're not built for the same purposes. And so just know why you're buying. I'll leave it at that as a teaser. Follow us on mikeonmoney.com or Instagram or any of the social medias, and I'll put out an update on cryptos and try to explain the difference between the different ones, because I've got a lot of with the pullback, a lot of people have talked about should they buy some, and that's the other thing I'll cover off as well, is if you are thinking of buying it, how should you buy it? Because there's a lot of different ways to go out and buy cryptocurrencies, and I'll cover that in a video as well, and make sure I bring you up to date. So with that, I'm going to let you go. Hopefully enjoy a nice afternoon. Looks like we're getting some sun here in Vancouver after a thunderstorm last night. And our new puppy, our 1-year-old puppy, our COVID puppy, had his first thunderstorm last night and did not like it. So hopefully everyone can go out and enjoy the sunshine a little bit. And visit us, send us your comments, your feedback, any other topics you'd like us to do a deep dive into. We'd happily cover that stuff off. And with that, I'll leave you for another great week, and I'll talk to you next Tuesday.